It's your lesson number 4, and it is regarding basic accounting terms which are oftenly used, and we are dealing with all these things. Or here they are. There are 5 basic things which will be discussed in accounting. Whether your business is small or large, you have to deal with these 5 things. These are also known as heads of accounts. For example, assets, number 2, expenses, number 3, incomes, 4, liabilities, and last, capital. So what are they? Assets and expenses, incomes, liabilities, and capitals. Let's see what are the assets. So the things owned and controlled by the business are called assets. Very short, very crispy definition, that all the things which are owned and controlled by the business are called assets of that particular business. Or we can say the belongings of business are called its assets. For example, land owned by the business is its asset. Buildings, plants, motor vehicles which are meant for use in the business for long term, these are known as assets. Furniture which are owned and controlled by the business office tables and chairs and all these things are, and along with the furniture, fixtures are also there. Fixture means all the things which are attached to your walls, 4 walls. These are your fixtures. For example, your point paintings and your clocks and your fans and all these things. So computers, debtors are the persons to whom you have to get money back. You have sell your goods, you have sold them goods on credit, and now you have to receive. They have promised to give you back after some time. So bank balance, the money which you have deposited in your business bank account, it is asset for that particular business, and definitely the cash, and there are so many others. So some assets are have life less than 1 year. These are non-current assets, and some are being used for business for more than 12 months, and these are known as non-current assets. So let's see what are the expenses. So expenses means the amount spent to meet day-to-day expenses of business are known as expenses. For example, you use electricity to run your business, and the electricity bill is your expense here. You use different utilities, for example, water, gas, and other things. So the bills of the amount spent on these are known as your expenses. So you paid your salaries to your staff, and business pays salaries to staff. So salaries are the expense of the business. Rent paid by the business is also expense, and here insurance is your expense. Bad debts, the debtors who are unable to pay you back, that is business expense. And transportation charges, and there are so many others, and these are regarding your expenses. So let's discuss what are your incomes. So amount earned by the business, for example, sales made by the business, discount received, cash discount received is your income. Gain on disposal of an asset is income of the business. So commission received from customer is income of the business. Subscription in case of non profit organization is income. Interest earned by the business is business income. Bad debt recovered. Previously, you wrote them off as a bad debt, but after some time, they come up with money and give back to money to business and say, okay, man, it's your amount. And these are the income of business. Rental receive if some part of building is rent out to the tenant, and the amount received by the business is known as income. So here we have discussed three heads of account. Number one was assets, number two was expenses, and third was incomes. So it's all about this lesson. Just remember these things and learn them by heart, and watch my next video on rest of the two components. These are liabilities and capital. Okay, boys, thank you very much.